face warriors. Let's have a great week. 3 patterns in play. I'm not going to show them to you. You know them if you're a member. And if you're a member, you know you're going to get all kinds of different perspectives. You can get Greg's Elliott waves and Andre's harmonic work, Blake and Steve's basic tech and candlestick work, as well as the macro. So basically 1, 2, 3. These are pretty similar. So 3 and 4 for the big picture from Stelios. Everyone have a good weekend? Okay. So since we're talking about candlesticks, which is, you know, a form of analysis here, I think, well, I'll give all you guys a candlestick lesson. You guys up for it? So let's look at some weekly charts in the indexes. Here's NASDAQ weekly. See this candle here? That was last week's candle. What's that called in classic candle analysis or technical analysis? And what's the one element missing? You're going to have to log in and out again. Bill, is my mic on?
We can hear,
my mic is on.
Fine. Yeah.
Okay. All right. So anyone know what the missing element on this candle, pretty bearish candle in NASDAQ last week? No, not a confirmation. There's only one element missing. It's a pretty negative week. In a classic key reversal, you not only take out the high and low of the previous candle's range, it has to happen at all-time highs, all-time lows. Yeah, you remember that, Ziggy, huh? Jack be nimble, Jack be quick. Jack.
That's what happened, actually.
Jumped over the. Huh? What?
This is a key reversal on the weekly.
Classically, it needed to close under the previous week's low.
Yeah, yeah. To be honest,
which it did not. So it's the only element missing from a classic key reversal.
Huh? But it's still, yeah, incrementally didn't do so, but it's still.
Well, I wanted to know if people knew the true definition of a key reversal, and a true definition is we close beneath the previous week's lows or highs on the engulfing pattern.
Notice also the huge RSI divergence.
I'm trying to give you a break from flying solo for at least 10 minutes. Don't you want to, you know, warm up and get into the cockpit and get into the cockpit and check all your controls and make sure you're fueled before you go up for your solo flight today, buddy?
Absolutely. It's all yours, Coach.
All right. Okay. All right. So anyway, I also wanted to show the difference between candles, okay? And this was a pretty negative week, right? I mean, if you just look at it daily, 4 hour makes it a little bit more, the 1 hour makes it very dramatic, right? You had this, then you had Facebook tried to recover with Amazon and got creamed again on Friday. So Friday was a pretty key day to me. But the point I'm making, along with the American Idol metaphor, is trade selection. So even within the indexes, you have leadership and you have indexes that are following. So look at the wick on this candle, NASDAQ. Look at the wick on the S&P. It's still a positive week, but pretty good wick, right? And then what was a laggard, the Dow, barely had a wick. I mean, if you tried to light this wick on a birthday cake, you would burn your fingers. Okay, so small wick, microscopic wick, larger wick, and classic reversal wick. So I think you sell rips. I think it's be hard for NASDAQ to overcome last week's highs. I think it should be difficult for the S&Ps to get back over 40 again. I think that was the high. I was talking 30 It got to 46, so extended above it. Keep an eye on the off number for this week. So by Friday, closing under 27.98 would be a 2-week reversal. Everyone with me? Why you don't give analysis like others though? Though you talk about NASDAQ daily. Okay. Well, I do. I'm not shy about telling you guys what I think. And here's a triangle that Grega brought up last week in the euro. So from what I understand, a lot of people talk about options in euros, because they try and pin the market so that both calls and puts expire worthless. So there must be a pretty deep liquid cash euro option market that the institutions use and everything. They're mainly writers, they're going to bet on there's going to be no premium because of just the statistics of, most options expiring worthless. So, option trader in here would say as compression builds, they don't know which way it's going to come out of here, but they put on what's called a volatility spread. We had an option guy with us last week who talked about putting on straddles right before earnings. So you would do that by maybe buying, 116 put and maybe 117.50 call. And the theory being that, there's a lot of compression. This is about 200 pips. So you could probably look for when we get a breakout one way or the other, 200 above here, 1940, 200 below here, 114. I think that's a target Steve's been talking about for a while. Similar situation in the dollar, basically range bound, getting some false signals. This was a false signal. This was a false signal. If the dollar does head down for a while, I think that might be a bit more supportive for S&Ps. I'm looking probably for the tipping point in stock indexes would happen if we rallied above 95.5 and started squeezing up towards 97. But it still has a chance to roll over. It's kind of tough getting positioned here mid-range. This could just be a pullback from the recovery we had last week. I would say closing back under this low or 94.18 would be a pretty negative signal for the dollar that will probably go for these lows. And then if you do that, you could, you're probably looking at the breakdown of the dollar, and then we could look for lower levels. But really, the action has been in the indexes. So when you look at the dollar sideways, right, for a long time, I mean, basically going back to June, end of June. So here we are a month later of trying to resolve a range, and it's starting to dwarf into the euro pound. So let's see what happens with euro pound. I'll be interested when Steve's flying solo with the scarf wrapped around his flight jacket to hear what he's saying about euro pound here. It's having a decent day right now at 89.10. I think his breakout was right around here, so maybe all we got was a little pullback for a breakout, or are we going to get 1, 2, 3 and then go? But this looks like pretty important resistance, 89.60 from 86.30 is 360, gets you up towards 92 eventually. So it's still looking good. And threatening stops, didn't get this stop yet, didn't get this stop yet. I think it could be a decent position trade that you just have to throw in the towel if we start closing back under 88.40 on euro pound. Even though euro, yeah, go ahead, buddy.
Hey, sorry to interrupt. Just wanted to, hi everybody. Right. Just wanted to add that we obviously have the Bank of England on Thursday. I don't know if you mentioned it. I just joined literally a minute ago.
That's cool.
And we have the Bank of England.
Yes. What are the expectations?
Market's pricing, I think 85% of a hike, of a 25 basis point hike. And this is, this is something that was priced some months ago. Then if you remember, Carney came out all dovish and it got transferred from May to August. And also we have the inflation report this month. And if, for people who are not aware, the Bank of England usually tends to move, let's say, more frequently on inflation report months. So February, May, August, November, because that's when they also release their forecasts and they do their tweaking and all that. So, it's a big event on Thursday because we're pricing in almost fully a hike. And, if they don't deliver, then the pound's going to be toast. And but then if they do, if it's not 100% priced in, so if they do and their narrative is not dovish, which could happen, then the pound should see some strength.
Carney, and not the dovish rhetoric. And
it
can happen.
It hasn't happened in what, 2.5 years now. Yeah, you're right.
You know what, Stel? If you're around for Lydia later today, why don't you put those fundamental issues and questions to her? I mean, that's her specialty. I'd be interested in hearing what Lydia has to say. So if you're around, feel free to just interject during that interview, just like Steve does. So I think those will be good questions to get her perspective on. So thanks for bringing it up. Okay, Steve, your propeller spinning on your, ready for your dogfight?
What?
Your dogfight.
Flying solo.
Flying solo.
Oh, yeah, okay, yeah. I'm,
You're the only guy that flies solo with 2 other people in the room with you.
You don't count. You don't count as a guest. I mean, you are the showman here.
Oh, you're a guest?
In a sense, yes. Something in between.
Oh, well, thank you. Thank you for showing up to support the company you own. All right, I'm through screwing around. Not much, not that much to talk about today with the action.
We didn't have any. I saw earlier today what kind of data we had. It's nothing much. We had some CPI data. All of them missed but incrementally. I think, regardless, of the little misses we had in the German CPI and the Spanish CPI, still CPI is above target in both those countries. So I think that doesn't fundamentally change much the picture, and that's why I think that the euro didn't respond negatively to that. Do you want to go through? Do you want to tell people what we should be expecting in the week ahead, and what you think might prove to be a market mover? And they say might because we had some serious data coming last week, but nothing actually managed to move the market in the end, right?
Yeah, that's true. Actually, we should also point out that we had the Swedish GDP today. Expected 0.5%, came in at 1%. So that's, that's outperforming. Just something I know. I don't personally trade Sweden, but there are a lot of people who do. Okay, so looking forward to this week. As I said, we had the Bank of England inflation report and the MPC interest rate decision. We also have first of all, we have the Fed, which is expected to do nothing. That kind of makes sense after the. Sorry.
We have I was going to my emails and stuff. Forgot it was
okay. It's okay. I took care of that.
I saw. But we have BOJ too, right?
Yes, I was going to say. Yeah, I was about to get to that.
By the way, since you mentioned that, Stelio, and you mentioned the better Swedish data, I have to say here that USD
the SEK is sick.
Yeah. Actually, oppositely, the USD SEK is sick because the SEK looks like it wants to actually start strengthening. I mean, it's already penetrated through this ascending trend line, and it's now retesting this horizontal area of support. I think that if we actually manage to clear this to the downside, which looks quite likely because, it was more than obvious that we had some momentum loss. We had the 3-die formation.
I told you it was a dominant formation on that rally. That the
Then we had then we had another attempt of a rebound, but that last attempt, the fourth attempt,
that was a 78.6 rejection up there.
yeah, never actually managed.
I've been following the SEC. That's why I've renamed it to the
I
SIC.
know.
SIC.
I know.
Can we change the initials on TradingView? USD-SIK?
And unfortunately not, but we can send them an email and ask them if there's something we can do about it.
All right, buddy.
The USD sextilio looks like it's at a good place to actually end up breaking down. So it's good that you mention it, because I think this is a currency pair that it's worth monitoring. So go ahead.
Yeah, and
you were saying something about the BOJ, mate.
Yeah. First of all, we have the Fed, which is expected to do nothing. But the statement might have some changes that might move the markets. But the main one, okay, apart from the Bank of England, the BOJ, there are rumors. I mean, I don't know personally, but people are talking that they're going to change their policy on their asset purchases. What are they going to change? I have no idea. But if they change something, it's not going to be to increase it or to do something more loose monetary policy. So this is something to be monitored for sure. And I think JGB yields have been going up a little bit in anticipation. So we have these three central banks meeting this week, of which the Bank of England and the BOJ are going to be quite important potentially. And then in terms of data, we have some PMIs. We have
There is some speculation that the Japanese. I mean, we've been seeing all along that the Japanese are playing ball with the US all along. I mean, they tried to ease the pain of the Chinese yuan weakening as much as they could. They've been supporting US stocks as much as they can. And there is some speculation that even this strengthening of the yen at this current juncture is not coincidental, that it's also to help a little bit with the dollar at the moment. I'm just telling you what I've been reading.
I really don't know. I don't have any comments. Sorry, I think I'm breaking up.
Yeah, I think you are as well. I mean, we've lost you now again. Okay, so bottom line, let's have a look of what is worth mentioning here, because to be honest, I mean, we had so much data Thursday, Friday, and we were expecting that something would make the market move. But at the end of the day, the market actually hasn't really moved. I mean, we've seen some movements during the week, but there was absolutely no technical movement that led to some kind of a technical change in the vast majority of the tickers we're monitoring, and we're monitoring a lot of tickers. But I'm forced to begin by having a look at what stocks did, because stocks actually on Friday did move. Okay, the S&P on the daily chart produced an evening star formation, so that's definitely a warning signal. Having said that, bears want to see the 2790 level break the downside. So it is a warning signal, it is a reversal signal, but is it enough to turn bearish? No, absolutely it isn't, right? As Dale did though, and he very correctly actually began by showing that the Nasdaq did suffer significantly, because that's a shooting star. That's actually an outside black candle, an outside shooting star. Almost made it to being a key reversal, almost. I mean, just for a few handles. And added to that, you have to consider that this is the weekly chart, okay? We are within a channel that the index has formed after breaking above another bullish channel. So this is just a steeper bullish channel, and we are within an ascending wedge that has been building within this channel, and we're just above the 161.8% extension of the bear market that we got after the Nasdaq peaked at the end of 1999, right? So quite a significant area here. Obviously, it's too early to call this a breakdown of this bull market. I mean, we haven't even actually broken below this ascending wedge, but definitely there are some serious signals of momentum loss. For example, look at this RSI. I mean, the weekly RSI made it almost to 85 when we peaked in January, and now despite having pushed to new highs multiple times since that, because I remind you this is the weekly chart, the RSI is like below 67. So this is a very, very noticeable RSI divergence, which definitely, sends some warning signals. I mean, the momentum is definitely not the same. The sentiment is also not the same. I mean, we've also been seeing huge divergence in the DSI between what was here and what was there. So, Nasdaq definitely showing some signs. And since I can focus today a little bit on stocks, simply because we haven't been seeing much from the FX world, and it is what it is. It's not that I can force it to move. Of course, we're going to see the FX pairs, but as I said, let's prioritize a little bit seeing why the Nasdaq has been breaking down. We obviously had that huge move lower in Facebook. I remind you, we were talking about that on the chat room. We had also shown that a few days before here in Face. Facebook was in a parabolic ascent. I mean, it was in an ascending channel. It broke above it. It came back. It retested the support, and then it went on another ascent. It formed this ascending wedge, which broke above this ascending wedge. So it actually overshot. And after closing here, then we got earnings. And what happened is that the market simply opened up immediately below the larger ascending wedge. And below the 200 EMA. So this was a huge move lower. Just look at the RSI. The RSI plummeted from 75 down to 30 directly. So technically speaking, this is like a huge break. I mean, this is some technical damage that it's extremely hard to see being repaired like immediately. We just plummeted below the 50 DMA, the 200 DMA, this trend line. And as you see, we've made a couple of attempts of retesting this trend line. Both of them were unsuccessful, both on Thursday and Friday, actually. And the market is actually trying to hold this horizontal area of support at around 174.50. But if that breaks, I think that we can be looking for a lot more downside. So the FANGs were actually the ones that were the steam engine of most of the gains we've been seeing, and Facebook did that. Netflix did this, right? We also got earnings. We broke lower. This was perfect, actually. We came back. We retested this triangle, and we're now depreciating, right? And it looks to me this is what we drew actually that day that we rebounded after the earnings. I said that worst case scenario, in my opinion, worst case scenario is going to go back to 395 before seeing more weakness. If it doesn't see more weakness just from this triangle, it didn't make it to 395 because anyhow, I thought that's like the maximum that it can rebound from there. On Fridays specifically, we actually formed the bearish engulfing. So Netflix points to further losses as well. So there we go. We had the FANGs. F is out of the window. I mean, it's technically broken. N is out of the window. It's technically broken. Alphabet, which is Google for those that don't know, had some fine earnings, etc. Regardless, just look at the candle we got Friday, right? A bearish engulfing here as well. So, given the parabolic ascent as well, the market seems to be starting to worry about that as well. So, I would be paying attention to this because this might end up being, I mean, if we get a gap lower, right? So if we get something like this and we open somewhere here, this can end up being a very nasty island reversal. So, I would be extremely careful here as well because, when people start seeing the FANGs one by one break down, they start getting worried like, okay, what if the rest are to follow? And this is Amazon. Okay, we've been showing how parabolic the ascent of Amazon has been. I mean, it's simply parabolic. So Amazon is still holding, although Friday's candle was extremely bearish, it's still holding above a broken ascending wedge, which we got after breaking above another ascending wedge, etc., etc. So it's, one bullish formation was breaking out to give its place to another more bullish formation, the same again and again. But this is completely unsustainable. So I would be quite worried here, because we're seeing some RSI divergence as well. We obviously did get a good surprise, as you see here, but that doesn't seem to be propelling the stock higher. I mean, it looks like the market has already priced in everything good that it can come out of it. So this cannot happen in in eternity. So I would be quite careful as well. I think that Amazon might follow, and if Amazon actually does follow, this can end up being very nasty. So I would be quite careful of stocks. Let's also show the IWM, because the IWM never made it actually to new highs. It looked like it would push higher once again, but this rejection from this channel, as it seems, was the deal. I mean, we seem to be pushing lower again. I wanted to actually see a move like here. We had like a nice confluence up there, but as it seems, we might be going lower from here. I would be monitoring this broken blue trend line that you see from the previous triangle as likely, acting as support. But other than that, if we actually make it below there and we finally even test this ascending channel, I think that a break below that area, we'll have completely broken the index. Just notice the RSI divergence here as well. I mean, the previous high that we had, it was with an RSI at roughly 77, and this high that we actually had now, which is just a little bit lower, is barely at 60, right? So it's not a textbook RSI divergence because we didn't have a new high. Regardless, though, taking into account how close we came to that, the RSI's difference is very, very big. So it clearly shows some momentum loss as well.
Steve, you know what was also interesting about the whole break in NASDAQ and Russell? Zero flight to quality in the treasuries. They still look negative and look to be spiking to old highs and yields. Look like they're coming.
Thank you for mentioning it, because it's a good chance to revisit what's happening here. I'm going to start with the yields. Okay, so in the yields, we had been talking about it a long time before it broke. We had like a huge inverted head and shoulders formation here in the yields. Needless to say that if for some reason this thing makes it to the target, right, which is like at 4.
Wow.
The target of this inverted head and shoulders formation is at 4. This is another formation that I was monitoring. 4%. Needless to say that I strongly believe that 4% yields, first of all, if we make it there, I believe that it's going to be a vicious circle after that. I mean, if actually yields make it 4%, I don't find any reason why that should be stopping. That's
like the song New York, New York. If we make it there, we could make it anywhere.
Yeah, something like that. Exactly.
Okay.
Exactly. Frank Sinatra. Thank you.
Yeah, you're welcome.
So
Chairman of the board.
That's point number 1. Point number 2 is the following. For those that don't understand, let me make it very, very clear. The debt and the deficit trajectory for the US, not only the US, but we're mostly focused here in the US, right? Because it's the global steam engine for the economy, right? The trajectory is completely unsustainable. So if the yields start going nuts, the US is first of all going to go in a recession, with whatever that means for the rest of the planet, which is going to be more or less the same. And not only that, but the Treasury will actually, the Fed and the Treasury and the government will have to make a decision if they want to fight inflation or if they want to fight recession, right? Because and they might even have to do like tax hikes during a recession, which is like throwing gasoline on fire, right? Why? Because simply if first of all, a lot of people don't know that, but the US government has been lowering, out of necessity, I'm guessing, the maturities of the debt more and more. I mean, in the old times, like decades ago, the maturity of the US debt used to be quite high, 10 years or whatever. But now the maturity of the average maturity of debt is like low, like 3.5 years, which means that if actually yields shoot higher, the repercussions of that are going to be felt almost immediately to the budget. So a lot more a lot more taxes will have to be diverted in just servicing the debt. So keep that in mind, meaning that yields are extremely important and extremely important to the economy. Now, obviously, yields would have been a lot higher by default if they weren't being artificially suppressed, for years from central banks everywhere. But if this goes out of hand, that's going to be extremely nasty. Now, looking at the treasuries themselves, no, actually, I want to see the ZDEM. Here's the ZDEM. Okay, looking at treasuries, I was looking for this to probably produce one more high, like, so we could see like an ABC. And theoretically speaking, it is still a possibility, right? It is still a possibility that we're going to find a low above this low, and we're going to make one more attempt, to move higher. But other than that being a possibility, it's not the most probable scenario, because what I see here is simply like some kind of a triangle. You want to see it like a flat top triangle. You want to see it like this kind of a triangle. You can see it as you like. But we're breaking below this ascending trend line, and in all likelihood, this can end up leading to new lows, so to new highs in yield. So definitely, what you're saying, Coach, we're not seeing flight to the treasuries. Sorry to make a little change here. You mentioned it as a flight to quality and a flight to safety. But let me ask you this question, Dale. If the US government was an individual or a company that had the same kind of balance sheet that the US has, would you consider buying their IOUs as a flight to quality? I doubt that, that would be the case. So the question is, when does the time of reckoning come? And by time of reckoning, meaning the time that those that actually lend to the US will realize that the chances of getting 100% on the dollar back are extremely thin. Of course, I'm not assuming that the US is going to default on its debt, because the US debt is denominated in dollars, so they can print and repay as much as they want. What I'm doubting is that they're going to repay back the actual value of the debt, right? Because if the currency gets devalued, by a lot, if inflation at some point is running high, yeah, you're going to be nominally paid back what you're owed 100% on the dollar, but what you're getting back is not what you actually lended once. Anyhow, let's go back to our charts here, because this is more of a macro conversation, and it's not one that's pleasant for the vast majority of people to hear, but reality is what it is. It's like a train. You can't really avoid it. If you're on the train tracks, at some point you're going to get hit. And let's have a look at the USD, since it's one of the prevalent forces of what's happening in the markets lately. I mean, the depreciation of the yuan. As we see, there is some obvious momentum loss here. You can also see it from the RSI. I mean, previous time RSI peaked almost at 90. We're currently like roughly at 70. So, this is quite a divergence. So, that tells me that the easy part of the move higher, like the impulsive move of the part higher, is likely over. So I don't think that buying the USD Chinese yuan up here makes much sense, not until we at least see some kind of a pullback. So, it might move higher from here, very likely, but I would definitely be expecting some kind of a pullback back to this horizontal support resistance area, roughly at 670, 672, before looking for more upside. Now, Euro USD, Pound, there's nothing I can say here, simply because they've been extremely boring. They've been stuck in equivalent, one of them in a descending channel, the other one in a flat bottom triangle. Obviously, for the Euro USD to attempt to do anything, we either need to see a break below 115 or a break above this descending trend line, in which case I would still be worried about 118.50, because 118.50 is quite a significant area of resistance. So if you want, you can also see that, for more, to be on the safe side, you can see this as a range, right? A range between 115 and 118.50. In my opinion, whichever of these breaks, we will see some kind of an extension. If we break above 118.50, I think we're going to make it up to 121. If we break above 115, I think that we would at least make it to 113. Why 113? Because 113 is a previous trend line of importance here in the market. You can see it. So I do think those are the two scenarios about the Euro USD, but who knows? I mean, we've been stuck here for several weeks. We are in the middle of the summer, so nobody can guarantee that this situation is not going to go on for another week, another 2 weeks, another 3 weeks. Who knows? So you just have to be patient. I mean, you can't force the market to do what you would want it to do. I mean, it is what it is. Now, having to do with the cable, 130 remains a critical level. We actually never managed to break below 130 on a daily closing basis. So 130 is definitely support. 133 is resistance. I think that if we do break below 130, we should extend to at least this confluence of supports at 128.30. If we break above 133, I think there is a good chance that we're going to make it up to 136. As long as we're in between, it's like watching grass grow. I mean, it's, tedious and boring, but it is what it is. Now, having to do with the yen, because the yen seems to, by the way, before I go to the yen, same situation here with the Aussie and the Kiwi. I think that remaining bearish, the Aussie and the Kiwi, as long as they stay Aussie between the 75-cent area. As you see, this looks like a triangle below 75 cents. I think that as it's a triangle, and even seeing at the RSI profile, a continuation lower is likely. If we do break this 73 area, I think we should extend to 71 cents. For the Kiwi, the equivalent resistance area is this 68.70. We seem to be in a triangle below it. If we do break below this triangle, there is a nice confluence of support at 65 cents. So, unless we invalidate those formations by breaking above the resistances I mentioned, maintaining a bearish bias for whenever we see a breakout, it's what you should be doing, because it's the highest likelihood, right? You can never be sure what the market's going to do, but from experience and from technical formation, you can know that the chances are higher for A to happen or B to happen. Now let me go to USD CAD, and then I can go to the yen. USD CAD seems to be consolidating near the lows. I was expecting that we might have found. I still have half of my position. I closed half of my position Friday. I still have half of my position short, and the reason I'm holding it is because I don't really see some kind of a rebound. So this looks to me like a consolidation, like a very tight consolidation. And the more we consolidate without rebounding, the higher the chance that there is more downside left. So, for example, there is a nice target here, the 50% fib of the last move higher at 129.50. Also at 129.50, we now find this broken trend line resistance that might work as support this time. So 129.50, why not? I mean, it's 100 pips lower, looks likely. So I'm holding the other half of my position short, for another move to the downside. Now, if it happens, it happens. If not, it's okay. I've already taken some profits and I've moved my stop to break even, so it's okay. But it looks like to me that it might want to move lower once again, at least. Now, seeing a rebound from there is a decent likelihood, because so far this pullback looks corrective to me and not impulsive. Now, looking at this, I remember that Dale mentioned the euro pound, so I didn't want to interrupt him again. Euro pound does look good. Why? Because it found resistance at the triple confluence of resistances up here. Why was it the triple confluence of resistances? Because this was a horizontal area of resistance, the 50% fib of the last move lower, and it was also the resistance of this red ascending trend line, channels trend line. So, seeing a pullback from there makes sense. But on the other hand, what did the pair actually do? It came down, it retested this breakout area, and it seems to be picking a bit from here. So, if you are bullish, this doesn't look like a bad setup. You know where you're wrong. I mean, 88, you don't want to see a move below 88.60, 88.50. As long as we stay above that, there is a good likelihood that we can see an acceleration higher from there. So I think this looks very decent, especially considering the reward to risk ratio. Now let's have a look at what the USD yen is doing, because the USD yen is definitely looking quite heavy. The move lower on the shorter time frames looks somewhat impulsive. So it makes me believe that there might be at least one more leg to the downside. On the other hand, the pair is barely holding this ascending trend line, which I'm paying attention to at the moment. So I would probably favor one more leg to the downside, but I want to see this intermittent ascending trend line break first. Okay. In which case, I think the next area of support is at 110, because it's the 61.8 of the last move higher. It's also the 200 DMA. But in all likelihood, I think that if we actually start producing one more leg lower, we might even make it lower than there, like towards even retesting the 108 area. Regardless, the USD yen is a mess. It has been producing fake moves on occasion, and it's broken its traditional correlations with risk, with yields. So personally, I'm not looking forward to trading it. I'd rather stick to trading other things that look much better to read and interpret. Okay. Okay, I think it's time for me to have a look at questions. Euro, Aussie. Okay, gold. Okay, we have quite some questions, but I have the time to cover them all. So let me start by having a look at the metals and crude that people are asking for, and then I'm going to go over the Euro crosses, Aussie Swiss. I haven't had a look at Aussie Swiss definitely in some time, but okay, let's do that very fast because I'm very curious to see what it currently is. Okay, not much has changed in the Aussie Swiss. Aussie Swiss stuck in a symmetrical triangle. Personally, I wouldn't be doing much unless we see a breakout from this. You can see it. I mean, it's very, very clearly a symmetrical triangle, right? So I would be monitoring this support. We are closer to support. That's why I'm saying monitoring the support, because it would take us some time to go back to resistance if that's what the pair wants to do. So I would be monitoring closely this support, because if it actually breaks, I think that we can see, an extension to the downside. So that would, let me also add to this, that Aussie moving lower while the Swiss is strengthening, because that would be required to see the Aussie Swiss move lower. I mean, to move strongly lower. I mean, ideally you would want to see both the Swiss strengthen and the Aussie weaken. That would definitely happen if we got some risk off move. So keep in mind, if we get some big risk off move, that this particular pair should be sensitive in seeing an extension to the downside. So, I would be monitoring this trend line support of the triangle. I think until this breaks, there's not much to do, unless you're a scalper, of course. I'm having a look at daily charts here. So let's have a look at gold. Okay, as I was saying, I was really unconvinced by the way gold and silver in particular were rebounding, right? And you can see it here. This rebound that we saw within probably what is a pennant is definitely not inspiring. Definitely. Now, does this mean that they're going to move lower once again? Not necessarily, but it looks more likely than not, right? Just look at it. I mean, it never managed to produce more than a single day of a recovery before it sold off again, and then another day of recovery, and then it sold off again. And now Friday we had like a spinning top. Today so far it's an inside doji. when you see this type of price action, I mean, something that's already beaten down, just simply consolidating in a tight range without managing to produce some kind of a stronger reaction, it smells like it wants to move lower again. So that's what I would be looking for. Even if we do see a rebound from here, I think that unless we break above this descending channel's resistance, it would be very dangerous to be looking for something more. Same deal with silver. I mean, silver seems to be crafting here probably a bear flag. It looks like it might end up being a triangle. You can never know in advance. But for sure, as long as it remains below 1575, there's nothing to talk about here. I mean, we have stalled at the 161.8 extension of this move higher. So, that technical level was enough to at least stall the downside. But there is nothing here that tells me, oh, this thing is about to reverse and, move decisively to the upside. I need to at least see a break of 1575 to start considering more constructive outcomes. Until then, I'm afraid that it's not something much to expect for. Copper has broken above this descending wedge. I think that copper looks more constructive. I mean, I would expect that one more leg to the upside might take place before we see lower prices. So like an A, B, C, right? So I still maintain half of my initial position, which was only half. So I took profits on half of my long, and now I have a quarter of my standard position only left. And I would want to see a move towards like 293, 294, in which case I would take profits on the rest of my position. But unless we break above 294, I wouldn't be viewing this rebound more than corrective, to something more than just being a corrective rebound. Okay, so I want to stress that out as well. Now, palladium has obviously rebounded in a stronger manner, but it remains below this broken channel support. So another move to the downside, as long as this trend line is holding, is likely. So be careful, because we're approaching that area. Platinum, platinum is a disaster. I mean, if you're bullish, it has been breaking, below any kind of a formation that it has attempted to reverse from. It has been breaking lower. Just we were monitoring this as a possible descending wedge. It actually moved lower. We've even seen prices that are below the recent low that we had in 2016. And now the only thing that is missing here is for us to test the Great Recession's lows, which are roughly at $750. So, nothing to say here. Platinum remains extremely bearish. I would need to see at least a move above like 875 to consider this as some kind of a market that's looking to bottom. Let's have a look at crude as well, and then I'm going to go to the Euro crosses. Crude, I'm still viewing this formation as a corrective formation, and it looks to me like there might be one more leg lower missing towards the 66 confluence of supports. This might be a pennant. This might prove to be, though, a bear flag, right? So it might be a parallel. So we might see like a big rebound towards there. I don't know exactly what kind of formation it is, but so far I'm treating it as a corrective formation to the move lower. I would want to see then one more leg to the downside. I would really want to see this 66 level be tested. I'm expecting that it might act as a magnet, since it's like a triple confluence of supports. And then I would be feeling much easier about looking for a resumption of the uptrend. Okay, of course, it depends on what kind of structure the price action will have if we make it down there, but I'm just giving you an initial assessment of what I'm looking for. Now let's have a look at the Euro crosses. Our friend here asked for the Euro Aussie. Euro Aussie obviously stuck. You can see it here. it's very clearly stuck in a range between 157 and 159. We have done some attempts to break above or below, but on a daily closing basis, we haven't actually seen a daily close below 157 or above 159 since the end of June, right? So it's already more than a month that we've been stuck here. So I would want to see a breakout from this range to then look for an extension. My intuition tells me that the chances of this breaking to the upside are higher, simply because we came in this consolidation from below. So, but you know, regardless, I wouldn't be trading it in advance. I'm telling you what I would be looking for. If I had, you know, a gun on my head and I had to choose a direction, I would say break to the upside. Euro Kiwi, same deal here, as you see. Another type of consolidation, looks like a pennant, or it might be a bull flag. It depends on how you decide to draw this line, and it depends on what happens with the price action from this point on. So, you know, we have to wait and see, but it looks like a consolidation that might break to the upside as well. I mean, it's more likely to break to the upside. Regardless, there's no guarantee it's not going to break the downside, but we have very clearly defined borders, let's say, to this range. So, you know when you're wrong, which is always a good thing in planning any trade. Nobody asked for it, but let's have a look at the pound crosses as well. Pound does moving lower, doesn't look impulsive to me. Looks very choppy, very overlapping. So I would still not rule out a break to the upside. Looks like we're either in some kind of a bigger triangle like this, but it's too early to say, right?
Lydia will tell us.
Yeah, that's a good idea. And pound Kiwi looks the most bearish to me here because we got a move lower. This looks like a little bear flag to me. So pound Kiwi tells me, I mean, if I had to be short one of these pairs, it would be pound Kiwi, because also pound Kiwi is within a bigger symmetrical triangle. So why not break lower from here? Keep in mind, this is a confluence of supports. We have the 50 DMA, the 200 DMA. It's also like a little bear flag here. So why not break lower from here and come all the way down and retest this symmetrical triangles support? So, you know, that might happen. So between those four pairs that we just had a look at, I think that the one that looks better to the downside, if you actually want to short one of them for some reason, is the pound Kiwi. Let me have a look at more questions. Someday I'd like to find that guy who has a gun to our head. Ziggy says, yeah, that's a good point. Crude, yeah, we just covered crude. Nifty. Okay, we have our friend here that asks for the Nifty, and I think I had made it quite clear, and I wasn't wrong, that the Nifty, after breaking above this triangle, I haven't touched anything on my drawings. I had said that, listen, this is a triangle. We came in the triangle from the downside. Chances are that the triangle is going to break to the upside. The bearish scenario is that we break the triangle to the downside, in which case I would still be bullish, but from a lower level. Okay. Regardless, the higher probability scenario came into fruition. This was a textbook triangle. It did break to the upside. It has broken above the previous high. So there's nothing to talk about here. I mean, Nifty is bullish. It remains bullish. And if you want to have a look at upside targets from this point on, what we have to do is have a look at some fib extensions from the corrective move lower, most importantly, the 127.2 and the 161.8. So next upside target, 11,500, because it's the 127% extension, extension of the last corrective move that we had. And then
that's drive two. That's drive two we're in right now.
Depends on how high RSI makes it, Dale. But
yes,
yes,
so far it's diverging from drive.
Yes, that is correct. But it's the move higher is ongoing, so we have to be, we have to be a little bit patient here. And the next upside target is the 11, okay. The next upside target is 11,925. which is the 161.8% extension. So obviously, I would be looking for some reaction from either of these levels. Regardless, as long as the previous high now holds, you have no reason to be anything but bullish. Okay. Let's see if there are more questions that I haven't already covered. Aussie Swiss weekday. Could you comment on DAX? Yeah, absolutely. Let's have a look at both the DAX and the FTSE 100, actually, which we haven't done today. So, before I forget, I'm going to go to the DAX. Coach, just look at
Yeah,
this
the
trap here.
FXI. Yeah.
Yeah, just look at it.
Right.
So, you know,
It's
FXI.
holding the island. Yeah.
Yeah, it is holding the island. It's
A lot of islands out there.
a lot of them, actually, yeah.
It's kind of
So,
unusual, and it's a pretty unusual formation.
Indeed. Let's go back to the Nikkei because we have nothing to say about Nikkei. I just want to remind you that 23,000 remains the critical resistance. As long as we remain below 23,000, I think that it's quite dangerous trying to jump the gun and being long. So, you know, nothing to add here. Now let's go to the DAX. Okay, first of all, I have to say here that I'm not 100% convinced that DAX has resumed the upside because the price action I see doesn't look that impulsive to me. I have to recognize, though, that, you know, DAX, first of all, held twice recently, a very critical ascending trend line support, which defines the uptrend. So, you know, no chance I can be bearish DAX as long as we remain above there. But on the other hand, you know, this 13,200 level is also a strong area of resistance. Personally, I wouldn't be doing anything with DAX as long as we are between these areas. If I had to be something, I would be bullish because, as I said, this trend line is holding, but I don't have such a high conviction. I can tell you that this was another area of resistance that rejected the index on Friday, but that doesn't mean that we're not going to break above that as well. I can tell you one thing for sure is that if we actually finally break above 13,200, I then will be a lot more convinced that we're headed to new highs, right? But I'm not looking to be committed here. Now, having to do with the FTSE, I was looking at this as being a bull flag in the FTSE. It can still be a bull flag in the FTSE. I mean, somebody will say, oh yeah, look at it. We've broken above it. Yes, we have, but so far, you know, I'm not very happy with the momentum I'm seeing. I mean, I would have assumed that, you know, a break higher from here, you know, we'd have accelerated, you know, the gains. Regardless, I cannot be bearish the FTSE simply because, you know, the move higher from there was impulsive. I mean, just look at the RSI high. RSI peaked like at 85. So I'm viewing this move lower as corrective, but I'm not 100% sure yet that it's over. It might be like a more complex corrective move. So I can't rule out the possibility of you know, more choppy price action before we continue higher. But I'm pretty convinced that the FTSE is going to continue higher. Okay. So Dale, I think we covered quite a lot of instruments. It's 1 minute before interview
Quite
time.
a bit.
Yeah. Do we have Lydia with us?
Nice solo flight, man. Have you landed?
Yeah,
good job. All right.
Just before I ran out of fuel, actually.
All right. Well, you're like the Red Baron, and
yeah,
we have Lydia. We have Lydia with us, so let's see what Lydia has to say about some of these cable pairs here.
Yeah, and the FTSE actually, and the FTSE. I'm curious to see what you think about the FTSE.
Yeah. Okay.
Okay, Dale.
Hi, Lydia. Okay, thank you, Steve. Hi,
Thank
Lydia.
you.
I'm making you the presenter now. Welcome back.
All right. Okay. Good morning.
How you doing, Lyd? Hi.
Good.
How are you at Faith Mite today?
I'm good. How are you?
I'm doing okay. So last time you were on, you correctly identified a 133.5 price level as very important resistance that the pound dollar had to get through to stage in advance to 560. It was rejected, made new lows. So great call on that area. I'm curious, as are all of our viewers, what your take is here. Is a pound due for another rally or retest, or looks like we're in one of your fib zones here?
Yes, yes. So, I think it's due for another rally. Was actually looking to see how far, if we could stay below $1.30, I think this past week. And we did it and all actually found support. And drill right down into 240. We actually found support a couple of times right here at this 50. So sometimes this gets confusing. I know you guys can tell. We did this, so we had this rally to 132, came in lower, and that was after the rejection at 133.50.
Right.
Grinded all the way to 29.5. Had this rally, but that was a 618, and so we got rejected lower. So this fib here, let me know that if this fib, the larger fib here, was this a corrective rally? And we would see, we would move, we go back to that weekly chart, we would move right into the 61.8 at 129, which is actually what I was waiting on, was just a move to new lows and to see if this would be the level that we were going to hold or to break. But instead, what we got was a hold here. And we tested 130.80 a couple times last week, several times last week, as recently as Friday, and we ended up closing it back above 131. So I'm of the mind right now, my bias to the upside. I think we break above 132, which breaks this fib for a return, and like you said, a retest to 133.50. And you all know it's 133.50 to break or hold to determine if we finally get a correction of this down wave. Just know that when you're trading cable, we have to correct this. We have to correct this move at some point. Cable always corrects, even if we go on for however long we go on in the one direction, grinding and not really making fib corrections. Cable always corrects. So I'm just waiting for this correction to finally take hold, and to be repetitive, we need a break and hold above 133.50. I think we're on our way.
Is that always correct? That this pair always corrects, kind of distinct from other pairs, that you could always count on prices correcting more in cable than, say, for example, euro?
I mean, I think all instruments correct at some point. Right. So I just, because I've been looking at this for so long, I just have the confidence that we're going to get a rally, right? You just can't be too overconfident. So like when we got to 133.50 a couple of weeks back, I was holding for a move to 130, but this 135, which is now the 32. So you get overconfident. The trick is not to get overconfident, because you never know when is that going to happen. Will the market break or hold, right? So you don't get. I didn't end up getting the entire move. I had to come out, on a correction.
You see a different nature of trading during the summer in cable. Does the quietness make it more technical or less?
Actually, I think the quiet makes it more technical. I think though that it just comes more unexpectedly, right? So you're during, I guess during when it's not non-summer months, we just came to get moves a little bit more frequently or fluidly. Like I think we would have gotten a correction of this move a lot sooner if we weren't in these summer trading months. And so you tend to get the grinds, you get to get the chops, and you get to get days where it's like the markets are sleepy, they're just not really moving at all, as opposed to being more or less technical. You're just not really getting swift movement. So for swing traders, we have to just be more conservative in our targets. Like I said, I should have had an exit at 133.50 as opposed to waiting for the correction into the 38.2 fib, which at the time was 650.
So take what the market offers you during that type of time frame. Lower your expectations for objectives, maybe from 100 pips to say 60.
Yeah, really just trade level to level. When we hit those levels, respect them as much as the market. respect them with the full expectation that the market likely will too. And there's a couple of examples on some of these crosses where the levels have been holding, and it's just important to respect the levels during these summer months.
Do you think that Carney moves this week, Lydia, and is, as Stelios was saying, at least part of it priced in? And if they don't do anything, there could be pretty negative downside action in cable?
What is this? This is August, right? Yes.
Yeah, they meet this week.
We should get a, yeah, they moved this week, but we should get the inflation report today, this week as well.
Okay.
Or is that coming in September? So they tend to move around that, or the kick is the kick it towards the, well, we wait for the inflation report. I think, I'm not sure if Carney moves, to be frank. I don't think that, I think that the developments in Parliament and in Brexit may have put the skids on that. But I wouldn't be surprised if he did, because you know, one thing central banks like to try to keep is their credibility. And since he's been signaling that all year,
yeah,
it might move for that reason. And I think, yeah, it's priced in. So traders should be careful not to get a huge reaction, really in either direction. And whatever the reaction is, watch the levels. Watch the levels. I have no expectations of the Bank of England right now. I just think everything is mired in Brexit, and anything they move is because of Brexit. If they don't move, it's because of Brexit, right? So,
you know, I even read something real strange, Lydia, that they're preparing their military for a hard Brexit. What could they possibly fear? The French and Italians usually give up right away. So, do you know what they're worried about?
I have no idea what they could possibly be worried about, given their geographical position in the world. I don't think the EU is going to turn that much against them. But,
a little paranoia going on there in the UK.
I think all of this is driven by paranoia of some sort. And I thought that, I mean, that's what talk about an overreaction. But we'll see.
I don't know. I thought maybe they did it because of Trump's visit. But how about Stel, if you're still here, did I miss any of the fundamental angles that you may want to address with Lydia coming up here? I guess he's not here. All right, Lyd, why don't we move on to, say, Euro Pound, threatening the upside of the range for the 1 millionth time. Is this it?
It's likely not it, because it's still summertime. But I agree that this thing is moving higher. Weekly chart doesn't show us much, but these ranges that we've been in. But this is more of the look that I've been watching. This move, this fib move that hits the 123, and as expected, once you do that, we turn over again and drawing another fib. This is that move there to that 89.50 area. And actually, if I can just back, we've come here into this 89.50 several times and have turned over. So this is really the probably the range extreme.
Yeah, the bear, they call it like the Bears last stand at 89.43, 89.50.
Yeah, I'd say so. I think if we could break above here, we'd have a nice move into 90.50, which is probably, you know, the kind of the extreme tops here. So 89.50, which is probably, to me, a range extension from where we were, where we've been sitting. It rightly turned over, likely because of resistance and, you know, the fib extension target hit. And then we turn into here. And yesterday we found these lows, really the 618. We got a break here. We got a nice bear trap here, below 88.70, and now we're moving higher. To me right now we're in a fib move, but it's the Euro Pound. It's the summer. The ECB didn't give us much. Didn't give us too much. I mean, we saw the euro roll over a little bit, but not much. And so this was my hesitancy while I was in at 80 at the 50, you know, I had my stop really closer to below 88.60, and I think that was mentioned as a support level. Just because we had the ECB, I wasn't really convinced with the market reaction to the downside. It looked to me like a buying opportunity. So I expect that we'll get this rally to grind back towards the highs at 89.60, 89.50. And I'd like to see a break and hold above that to get us back to the next target at on the daily chart, which would be the 90 to 90.50 level.
Okay, so it's had a nice little grinding advance in the face of a sideways dollar. So could this be, if we do extend to higher levels, like you're talking about, be more about Brexit fears, cable weakness than euro strength?
Yes. Yes,
okay.
That's what it would be actually. Because if usually the euro drives this pair, but what we've been finding is exactly that. Despite the weakness or the strength in the dollar, we haven't seen the euro pound break lower, which is really an expectation, especially when we broke down to 86.50. So yes, that would be exactly right. And I think, again, a market reaction actually might be more distinct here in the euro pound with the FOMC, and then right after we have Bank of England. You might get more of a distinction, more of a move here in the euro pound, especially after months of grinding, than even in the pound dollar.
Yeah, a lot of compression built up.
Yes, there's and really basing too. This is like a huge base over a course of several months, almost a year actually. So if we take off to the upside, we could really see a nice move higher.
Yeah, I'm thinking new highs for a third drive on a weekly. Just a Nostra Pinkert call.
Good, because I'm positioned that way.
yeah. So I know you were also skeptical last time we talked about U.S. dollar yen strength, yen weakness, and so I'm curious where your head's at on Guppy now that the yen has come off about 300 pips from its recent high, 200, 300.
So I'd like to see, I actually like to see it move a little bit lower. I'd like to see it move a little bit lower into 140, really 143, the new low on the weekly chart. Still maintaining the area, but I still like us to move a little bit. I think we can move a little bit lower. We have a failed high above those 140, that 148 level. And so that should move us a bit lower into 143. Also, we have a break of this fib. So kind of the same thing with cable. When we saw this move here, we had this right into the fib, but we got a failed low, which, said, when I think last time I was here, we said we're going to get a move above 148, but watch if it holds the fibs, which it did. And so now we're turning over. And so I did the same thing. Okay, it was just, but in this case, it broke the 61.8. And so that for me is a signal that we're going to return to these lows. So I'd like to see it move a little bit lower here. You see we're finding kind of resistance underneath that 618, but also kind of these other candles, the lows of these candles, and we're kind of finding some resistance here. I'd like a move right into 144, 143, these lows at 143.75 or 143.50. And then watch to see if this low, 143.20, hold. Like according to the weekly chart, we should get a bit of a move lower, and it doesn't have to be an extraneous move like 140 or even it could be 142.50, it could be 143. So I don't think that it's going to give us a huge trending or swing trade lower, but I do believe that we are going to come in and retest these lows before we see if we get a move to the upside. We're headed lower first.
Same type of picture with cable against the commodity currencies? Actually,
I like the commodity currencies higher, so I think that the commodity currencies are showing a lot of weakness. I think we've seen them lower because mostly due to the pound weakness. But like I see the pound Aussie here we're looking at. I see the pound Aussie moving higher. Same kind of thing on all these weekly charts, these failed highs, not really so we got these nice moves earlier in the year and we haven't been able to return to these highs. And then we get this kind of backing off. But here, again, level to level, this one came into 175.71, which are these former highs back here last year, the spring of last year. It's been a serious support level, actually, as we've been moving lower. Even here, we got a nice little bear trap and came right back above this kind of doji candle right at that support level. We hit this a couple of weeks ago, same support level. Now we're turning higher. This is a better look at it. So really, because we are not, so again, if we look at the daily, this is kind of, we're not getting back above these highs after this failed low. So I would like to see a move here. Otherwise, if we test back around these lows again, test this support level, this will be a more ideal entry for buyers. And so you want to watch this support level, which is a formal resistance level for entries. I think right here, we're kind of in no man's land. I wouldn't take in either direction really at these levels right now. If you want to see if we can get to 180, or we want to really see a retest and where you can pull a trigger on a buy. If we break, you want to see if we get a retest that holds, and you might pull the trigger there on a low.
Okay, so were there any other currency instruments you want to cover? Because I have a question for you, stock market related.
Okay. Let's take a look at the kudu just because I did in this one. So I actually think that this is is bullish, a bullish pair. Same thing. All the weekly charts are looking the same right about now. But if we just drill down here, this support level, this 92.60, is actually an this 50% fib of this kind of rally higher that really has failed. So we should get a move. We should have gotten this move to the downside, which we did, and we've just been holding. So I mean, I really was too of the mind that we were going to move actually back into support, because we had really essentially way back here, if you guys can see, we really had a failed high, and we should move lower than this correction low, which would bring us back in here. And we've been finding support at this support level for a couple days now, all of last week. So we're here testing these highs, testing these lows again. If we come off, watch just to see what happens into 192.70. I think 100 pips from where we are is a typical move for Kiwi, and I would be watching this, kind of this area here. And yeah, if we break below 91.50, then I would say again, next level we want to look at is 89.62. But yeah, I think here right now, until we get a nice hold below this level, we've had a lot of tests of this level and a lot of tests of 93.50 to the upside. So a very small little range here. And I'd actually like this to move higher.
Okay. All right. So I know you're a registered investment advisor. Mm-hmm. So I know people are probably asking you, clients, with what happened in Facebook last week, and and what happened in Netflix the week before. Mm-hmm. And then Google did very well. Amazon had blowout numbers, but ended up, after being sharply higher, closing lower on the day. What's your view with what's happening with what has been market leadership, the FANGs, and what are you telling clients to do in this environment? Keep their powder dry?
Yes, that's funny. So I just talked to one yesterday evening who is adverse to holding cash. So if we get out of this and I have a bunch of cash, what should we get into next? And I said, well, we talked about some ideas, but I told him it's good to have cash so that you can be in a position to pull the trigger when it's time to pull the trigger. I mean, we might see anything develop for a couple months or, till the end of the year. So I've always been kind of skeptical on, I've been skeptical on equities probably for too long, maybe. I got with the program, we got above 2,800 up here. I mean, it's a technical move. So if we break into new highs, I'm a technical trader. I'm not gonna, look at this and be a contrarian. So, but I've not been confident to move large amounts of new cash into the markets either. To me, the market leadership is all correcting. And what I would say, because we're dealing with stocks, that you really need to look at the fundamentals of the company and see if there's a real driver for the price action that we're seeing. A lot of cases not, and in some cases we might be. Also,
I would interpret your client's reaction to getting out, but what do we get back into? That people think that, and that's really the way the market's been behaving, is people don't get out of the market, they just rotate into a different sector. And it's like there's not even a concept of being in cash or having a portion of your portfolio in cash, which to me says there's still an awful lot of complacency in the market because people still have FOMO. Okay, they'll sell the high flyers, but what should we buy instead of standing aside? Don't you view that as a bit contrarian?
Yes, I do. Okay. And so I've been doing a lot of educating because I believe that.
So thank you later, Lydia.
Place to move large amounts of cash, but yeah, I think the market is correcting. When we look at individual stocks, I think individual stocks are correcting. I mean, if you look at Facebook, it's really just a fib move. I mean, it's a 618 move. I think it's low, but it's basing. I like your guys' island. I like that island. I would say, oh, I learned something today.
No man is an island, Lydia. All right.
So I learned something today with you guys. I never knew of the island pattern formation.
Oh yeah, it's in Edwards and McGee. But that's when you have people trapped and there's no way out. It's kind of like the TV series Lost.
Oh, I see.
Where they're on an island and they can't get off. And yeah. All right. So why don't you show our audience your website and the different things you do and how they could reach you?
Sure. So
that's a new design.
Yes, it is.
Nice.
I'm happy with the blog.
Actually, you have a green thumb too. Look.
This one looks better than the one in my car, but I also have this cactus in my car. Same pot and everything. Interesting. So Learn with Lydia is really the mentoring program and the coaching that I offer traders, new or experienced alike. Just depending on where you're at and what you're looking to, what your goals are, with having someone hold you accountable and kind of teach you through the markets for a period. Invest with Lydia is where you find more about our investment advisory services. And how we can help you there. And you can shoot me a message here on the blog. We'll come to eat via email, or follow me on Twitter at Faith Might. I know a lot of you are trying to look for me at Faith Might FX. That account is closed. I mean, I have it, but I'm not that. You won't get anything from me there. So follow me on Faith Might, and you can find me on Twitter, a little bit on Instagram. I'm trying to post some things there too a little bit. You can find me on Facebook at FM Capital GRP or FM Capital Group. The firm's on Facebook. We have a Facebook page there. Yeah, and just follow me. And I post the articles or the analysis here on the blog. Usually broadcast that on all the social media channels. And ask me questions. I answer as best I can without giving away all the secrets, because so that my clients and my students still receive the high value as well.
Okay, Lydia. Well, besides following Lydia, I hope that a great summer trading season follows you and your clients, Lydia. Appreciate you being with us again today, and the clarity of your important technical levels. We'll be paying attention. Good hunting, my trading warrior sister.
Thank you, Dale. Thanks, everyone.
Okay, Lydia. Adios. Remember, everyone, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday. And we're going to have, I believe, Trent and Justin from Forest Park FX. So get your technical questions ready for, what type of account would suit you the best, because they'll have the answers. So with that being said, see everyone tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios. Thank you, Lydia. And see everyone tomorrow.